All right, so let's go over the kind of strategy to play the Qs here. The Qs, if you don't know, is basically an ETF of the NASDAQ 100, and we're actually going to be trading the TQs and the SQs, which are triple leveraged Qs. So basically trade three times more, or three times percentage wise as much. If the NASDAQ, the Qs are up 1%, the TQs are up 3, and the SQs are probably down 3%. So that's what I mean by triple leverage. So anyway, let's start with we're only going to use two strategies. It's really only, we're just going to use two strategies. So I'll go over them really quickly here and we'll get to the chart from today. So pullback strategy. We want three red bars trending, obviously pulling back into the rising 8 or 20 MAs. I use the simple MA, 8 SMA or the 20 SMA, and a green reversal bar. So a couple of things, we'd like that to be a smaller range reversal bar, so I'll show you why. We'd also like railroad tracks, which means that the 8 and the 20 are moving in the same direction in unison, almost like railroad tracks. It's a pretty powerful move, momentum tell. And heavier volume pulling back, I'd like to see that, so the sellers get exhausted when the three red bars come down and maybe it's time to buy. But these are all just kind of guidelines, but we're going to follow these rules to the T on the chart today, the Qs today, so you can see what happens if you follow this almost to the T. And then another one is our base breakout. It's pretty similar. We're three bars basing, which means they're just going to be going, they're going to base. They're going to base. Into the rising 8 or 20 again, and an igniting bar. And what I mean by that is we want, generally, when base into the rising 8 or the 20, there's some bar or maybe a couple bars that ignite up above the 8 or the 20, and then the 8 or the 20 becomes our support. And that's why it bounces off so much, basing or pulling back. And then other requirements, low risk to reward. A tight base is better. The sloppy bases out there. It's almost hard to define what a base is, and also railroad tracks on this too. When the 8 and the 20 simple moving averages are moving in unison, that's all is very powerful. So the trailing method we're going to use today, excuse me, this is an old strategy, or chart, but you can take a look at these if you want. But we're going to trail out immediately on the 5-minute chart. All we're using is the 5-minute chart with Japanese candlesticks to chart all this. So I'll show you on the chart. We're almost there. So when the first red bar's low is breached, the first red bar's low is the new stop. So anything below the first red bar that we see, which would be a down bar, we're gonna sell. That's when we just get out, no matter what. So give room below the stop. General rule is 1 cent per $10 stock price. Basically, the TQs and the SQs are in the 30s right now, so it's going to be about 3 cents. And I'll show you that when we get there too. And I always use a stop limit order. I don't just do it manually. I just update my stops and have them set, just so in case something goes wonky, I'm going to be out. So. Well, let's go ahead and get to the chart for today. All right, let's go over the Qs today. We're going to start with the TQs. We only trade the TQs and the SQs, triple leveraged ETFs of the Qs, which are basically the NASDAQ 100, because they're mirror images of each other, and we can flip the charts and find strength in either one of them, really. So the reason we're picking the TQs to start is because on the 2-day, these are 5-minute candles. This is just a 1-day chart here. But on the 2-day, you can see this is today. It gapped up a little bit. So we're just going to start, and not that much either. So it kept our indicator lines. That's the purple is the 8-day moving average, and the red bar is the 20-day moving average. So it was kind of tame, actually. And then let's go back to just today. So excuse me. So there we start off, and kind of wild. It kind of always is in the morning, but not that bad. It was pretty tame today, and it's already starting to base. And it does base already within 20 minutes. Um, when we look for the base breakout, we want ignition first, which we got a little bit with a gap up. So we'll call that ignition, and then it based, as you can see. The problem with it, the only problem with it is it's a big base. So you go in above this, 33.34, we'll give it 3 cents to 33.37. And we'll go under that would be our stop, which actually was the day low. 32.94, but we put it at 32.91. So anyway, you hop in above that, and it triggered right here. So you're looking pretty good. Then we look for our first red bar. It's right here. We picked that low as our new stop, which was 33.54, but we're going to give it 3 cents down to 33.51. So that's our new stop. We're already doing well. Interesting thing is, if you notice, it's not just one bar. These two bars are basically another igniting bar. And what does it do? It bases again right into the rising 8, which is more than I would have liked. I mean, it's rising fast at that point, but that's the rule. So you got to get in above the base, which unfortunately was way up here. And your stop is still, if you want to add on, I should say, your stop is still below here. Whether you owned it from here or not, this is another buy setup, no doubt. So kind of big, but we'll enter above 33.78. We'll give it 3 cents to 33.81. So we're in at 33.81. It does us a favor and stays up. So we're looking for our next red bar. Unfortunately, the next red bar is quite large. So the 33.86 was the low, and give that to 33.83, and you would have been stopped out fairly quickly. So if you got in at 33.81 over here, yeah, it sucks. You only made 2 cents. If you got in at 33.37, you did fairly well. So the interesting thing here too is all these green bars going up. If we go to the SQs, it does present us with a pattern, and all those green bars that were going up are now on this chart doing the opposite. So I didn't see this one, and I didn't like it a lot, so I didn't take it. But technically, those are at least 3 bars trending down. A reversal bar, which is huge. We want those to be smaller, like I was saying, so there's less risk. And there's resistance here, even though it broke resistance on that bar of the 8. But gosh, it couldn't have gone much further. There's more resistance with the declining 20. So that's the reason I didn't get in, but I was dead wrong. If you really just follow the patterns and don't pay attention to the resistance, I mean, this didn't pull back into a rising anything. So I'd almost call that lucky. But if you did get in, get in above this bar and put your stop below that bar, and you would have done pretty nice. And first red bar, and then you would have stopped below that, and you would have got stopped up, but you would have done pretty well. At this point, I was almost hoping this would base into this rising 8, and it didn't. It just failed. And also you could say, well, there's 3, at least 3 bars trending up. Maybe let's try the TQs. But it's like the same thing. You're going into resistance again. It worked a little bit, I guess, but that's why I avoid those. That actually would have been close. I don't know, but so that's why we didn't do that. Anyway, so then we're getting a little kind of a base into a rising 8 with heavy resistance right here, especially with this starting to curl down a lot. Just kind of a choppy day. Nothing really, I mean, I guess these are 3 red bars trending, and there could be a reversal, but you're going into double resistance right here. And it's just kind of there. It was a Fed day, or there's a kind of an announcement later in the day. I'll show you where it was, and I think people were waiting for that. Then you get this 1, 2, 3. That's kind of a pattern, I guess you could have been in, and that would have been your reversal bar with at least 3 bars trending down. But again, you're into this, and also the day was. I think people were just waiting at this point in time. Is nothing exploded, as you can see from like here to here. You can call that a base of some sort, but no. So I think a lot of people are just hesitant to get in the market. We got 1, 2, 3 here. That wasn't going to be a sell setup the other way. We had a lot of bars here, but it's far above this. At this point, I wasn't looking at the SQs and thinking, well, wow, that's going to be a reversal. No, I'm actually hoping this would base right into that on the TQs as it tried, kind of got a little ignition, not much, kind of just following the trend line, and started to base and failed. It just wouldn't have triggered. It wasn't even a good setup, and I kind of knew it was not much to do. I didn't do anything here. You could read what you want here. Here's where the feds start talking. And then boom, boom. I think they talked until one of these bars. Maybe it was probably even this one. As you can tell, it has a bottoming tail. I think they were done, and the market kind of shifted up at that point. So we have the trending bars here, and we have a reversal bar here. Now, it's a tough spot here. It's going into this declining 8, and there's a little resistance here at the 20. The red bar is the 20, and the purple bar is the 8-day moving average. So I guess you could have got in right there. If you did, you would have done wonderfully and traded at the very end of the day. Again, I did not, but that is a pattern. It pulled back and it reversed. So if you did, want to go and try and defy this resistance, and this was rising though, so it's not as bad a resistance, but I was kind of done for the day anyway at that point. So, but you get in above, the high was 33.73. Get in at 33.76. Our stop is below that at 33.62, but we'll give it to 33.59. So you're in. You get in on this bar. Oh no, you don't. Actually, you don't even trigger. Yeah, because our entry would have been 33.76, and it only got to 33.75. Yeah, I didn't see that, but yeah, so that wouldn't have even triggered, because you always want to trigger on the next bar when you see an entry, and don't cheat. Even though if you did, it would have worked for you on this one, I guess. But yeah, so there really wasn't even an entry there. You can't call this a base into this and predict this for the last 25 minutes of the day. So that was it. But that's just another way how the patterns can keep you grounded. If you're new or trying to learn, keep an eye on, paper trade it, or maybe just buy one share with this method. And I can almost guarantee you, even just buying one share will make you better because it's not paper trading and you're actually pushing the button and trading something. So hope that was helpful. Like and subscribe if you like all this stuff. And I hope you guys had a good day in trading. And I hope this method at least sends you in the right direction if you're new, or helps you if you're struggling or maybe intermediate, or I don't know. It does work. It really, really does. So you guys take care. Have a good day.